Reports out later today. We'll look at why those two regional banks failed last month. That collapse caused people to rush to get their money, prompting financial fears across the globe. The reports by the Federal Reserve and the FDIC will also propose ways to prevent this from happening again. ABC's Lindsay Watts has what we can expect from Washington.
What led up to the banking implosion that put markets on edge and rattled the global financial system? Two reports out today will shed light on the failures last month of Silicon Valley and Signature banks. The Federal Reserve and FDIC releasing dual post-mortem reports. One big question: what did the Fed know and when? Before Congress, the Fed's supervisory chair was asked directly whether he believed the Fed dropped the ball.
Fundamentally, the bank failed because its management failed to appropriately address clear interest rate risk and clear liquidity risk.
This morning, Reuters is reporting that regulators were worried before the March crisis that the FDIC warned late last year large portions of regional bank deposit balances were uninsured, noting the potential for impacts on other banks. The reports out today are also expected to address whether regional banks should once again undergo stress tests like the nation's largest banks. Those rules were rolled back under the Trump administration.
We need better laws here in Congress.
There was a clear supervisory failure. Our regulators were simply asleep at the wheel.
Right now, another regional bank is on the brink. Shares of First Republic Bank plummeted nearly 50% Tuesday. In all, shares have fallen almost 90% since the beginning of the year. The White House says it's continuing to monitor the situation.
The FDIC will issue another report on Monday about deposit insurance. Currently, the feds insure deposits up to $250,000, though all deposits were insured when those two banks failed. Lindsay Watts, ABC News, Washington.